Good day, YouTube. This is Jay Money with Fallen Court Financial. Just a dividend article here. Those of you that follow my channel know I talk about a lot of different things. Dividends are one of them, so I like to diversify, like to be a little bit more of a safer play, if you will. Nothing's safe, but some of these are safer than others. So, but this is the most popular stocks at Dividend Stocks Rock. So. And as I said, I talk about a lot of different dividends, so there's a lot of dividend-paying stocks out there. But can they be reliable on average? Our members are aged. Their members are aged between 55 and 70 and manage over $500,000. Their top 10 favorite stocks greatly outperform the S&P 500 over the past 10 years. So you can kind of see by the chart the top return right on this line, whatever color you want to call that. I'm going to call it brown. And the S&P total return, which looks like it's black on my screen. So the bottom is the S&P and the top is the total return. So you can kind of see how they kind of mirror one another, but yet it's on top of the S&P. So here's our review of the top three. I've talked about Microsoft once or twice. The giant tech company has deep roots with corporate America. The company can count on cloud services and gaming products to support long-term growth. The investment thesis is one of the oldest and newest tech companies all at the same time. While it benefits from a strong core business that generates cash flow through subscriptions, management has proven its ability to develop other growth vectors. So they're always growing, and I mean they have the cloud, computers, just kind of everything. They recently acquired a player in artificial intelligence, Nuance, for $19.7 billion. This will mesh well with Microsoft's business portfolio and open the door to healthcare solutions. Also like to mention Microsoft's acquisition of Activision, which may bring in some tailwinds. Finally, if you had been waiting for an entry point with Microsoft, the downtrend in the tech company could be bringing as to the potential entry point. So we'll just have to wait and see on that. I have Microsoft. I haven't bought any of it for a while. Last I believe it was 300 something, but if you don't have a couple $100 to invest in a stock, I always like to point out M1 Finance, or you can buy slices on Schwab even now, so they believe they call it slices. Microsoft has several dark clouds hovering over it. The first is evidently the Windows Desk OS. Desktops are often replaced by smartphones, tablets, or two-in-one solutions where Windows isn't a major player. Desktops won't disappear soon, but there won't be much growth from them either. So I got to take that into consideration. So also have a slowdown in growth from its subscription business. And so they just have quite a few different avenues of income, and I'm sure they are working on others to replace where the future is going to be lacking, like in the desktops as well as the subscriptions. So while Microsoft can count on Azure and Dynamics to ensure growth, both products are not leaders in their respective markets. The tech giant must wrestle with other companies just as large. The pandemic has helped grow sales in some of the business verticals, such as cloud services and LinkedIn. Here you can kind of see the dividend growth perspective, how it's just kind of went up. With Microsoft, the corporate revenue, that's just going up. The normalized dividend earnings per share keeps going up, and the corp dividend keeps stepping up. So everything with Microsoft keeps going up, including the price. So Like I said, I haven't bought any of it for a while, but if you wanted to throw 10-20 bucks at it here and there, you'd end up with a couple shares eventually. Microsoft has successfully increased its dividend yearly since 2004. Its yield used to be an attractive as approximately as 3%, but the hype surrounding the stock has made it a low-yielding 1%. Even double-digit growth rate wasn't enough to compensate for the stock price surge since 2015. I got in 2017. I have a great return on it, but like I said, I haven't bought any of it for a while. One that I was buying in the 130s and 120s was Apple a while back, and I believe it's down again. It was up to 170. Last I looked, it was in the 150s. But Apple is one rare company showing a perfect dividend triangle. Apple is not only the most profitable smartphone maker, it can build multiple businesses around it. Iconic product from AirPods to Apple Watch. And Apple has developed a great range of many businesses generating billions in cash flow. Here's their investment thesis. Feel free to pause and go over that, but their first growth vector remains in its iPhone, and it's been seeing double-digit growth in the service division, which generates high margins. Think that services will benefit from rising paid subscriptions, 825 million up from 165 million a year ago, so that's quite the difference. So definitely doing that part of the business correctly. Management has become increasingly shareholder friendly, as evidenced by stronger dividend growth and massive share buybacks. And here you can see beating estimates at 9 cents and revenue by 3.28 billion in Q1 of 2022. So it's just going to keep growing. So majority of my money has been going into Apple and some other things instead of Microsoft, but they do have some potential risk as well. The recession would impact Apple's results, but the company still has many loyal customers upgrade their phones, and that's always going to be the case. Anytime I'm out and about, that's all anybody ever talks about is upgrading their phones and showing off their new phones and their 13s, 11s, 12s, whatever version that they may have. But it is well known a tech company need to continually innovate their product offerings to remain an even playing field with their competition. Apple protects its core products and strong product ecosystem and additional services. However, the introduction of the competitor's new phone that could potentially erode iPhone sales remains a possibility. Finally, the competition in artificial intelligence. I've been made a video or two about AI just yesterday. Has many contenders such as Amazon and Google, just to name a few. So I have shares of Amazon and Google as well, so both of them are at 52-week lows, so might want to check those out, and I'll link those videos in the description as well. Here's Apple's dividend growth perspective. As you can see, it just keeps growing up. Revenue definitely keeps going up and just shot up there. Normalized diluted earnings per share keeps going up. You can kind of see this mark right in here, everything just took off. And their dividend keeps stair-stepping up. So, unfortunately, the latest dividend increase was only 4.5% from 22 cents a share to 23 cents a share, but at least they're increasing it. But the company is in good shape to keep increasing its payment, and they'll keep doing it. They have room to grow. So, finally, take advantage of the recent pullback if you want to add Apple to your portfolio. So I've bought some just recently, like I said earlier in the video. Next is AbbVie. AbbVie, I probably have the least amount of shares. probably the least amount of shares of the three, Apple being the most, then Microsoft, then AbbVie, but I've been purchasing AbbVie, so that might pass Microsoft just in regards to the price, but they're the most generous yield in the top three. And AbbVie is a spin-off of the well-known dividend king Abbott Laboratories, or ABT, kept the medical device segment and created AbbVie for its pharmaceutical activities. And they have made acquisitions to bolster the drug pipeline the whole new level. So something definitely to watch. So their dependence on Humira, a tumor necrosis factor blocker, and reduce the effects of the inflammation has been reduced over the past few years. Humira represented about 58% of profits in 2019, down to 36% in 2021. AbbVie will lose Humira's exclusivity in 2023. New drugs in the company's immunology portfolio, such as Skyrizi and Rinvoq, I'm not sure how to say those, but that's irrelevant to the video, are accelerating more aggressive growth. You can go ahead and leave comments. I could care less on the pronunciation. AbbVie expects Rinvoq and Skyrizi to contribute over to $15 billion in sales in 2025. So definitely a long-term hold. All three of these are long-term holds for myself. AbbVie's growth is also fueled by its hematologic oncology portfolio, with a growth of 8%. In addition, we see a promising growth from its psoriasis and rheumatoid arthritis drugs. So people always gonna be needing drugs, buying drugs. So this dividend is here to stay. Humira's patient expiration 2023 for the United States is on the horizon, and we are reminded that the pivotal role of patents and competition in industry. Patents also allows players to reap the benefits of billions invested in R&D, and while AbbVie may be one discovery away from making billions, same goes for many of its competitors. For instance, competitor Pfizer could impact AbbVie sell expectations. Now AbbVie must convince the market of its pipeline is worthy of their investment despite Humira. So last time I talked about AbbVie, they do have that in the horizon coming up, so going to be losing Humira, but we'll see what that does to the price. But you can see how they just keep stair-stepping up like the other two. Revenue keeps going up. Normalized dividend earnings per share kind of took a dip, but it kind of pulls out of it, corrects itself, and the dividend keeps going up. So they are generous with the shareholders as of late. The company has successfully increased the dividend since 1973. Management has more than doubled the payout in the past 5 years, in addition to buying back shares. With a yield of 4.5%, is a great candidate for any retirement portfolio. And some of these that don't move much in price, I mean, Apple probably moves the most out of the three, but you also kind of get the safety. I mean, no stock is safe, but these are definitely safer than some of the other ones out there, since they are so huge and have been paying that dividend for so long. You don't get as much appreciation, but you do get that fat, juicy dividend. So, but that is it for the three. If you have any of the three or all three, you can leave that in the comments. So again, we have AbbVie, Microsoft, and Apple. And so I have all three, so Apple being the most, but that's some of the dividends that I'd like to point out today. If you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing, and hit the bell so you're notified of when the next videos drop. Again, this is Jay Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.